Ooh, my favorite time of year, right? But so what? It's getting that time of year again, folks, and we all have to think about tax filing for last year. And here to talk about year-end tax planning is Certified Financial Planner Jim Lineweaver and the Director of Tax Strategy Firm LFG Tax Services, Mark Sipos. Great to have you guys here.
Thanks for having us.
It's like having a lifeguard at the pool in the dark right now for me. I mean, this whole thing getting ready for tax time is really tough. So where does somebody begin? What should they be doing right now?
Well, the most important thing is to organize your tax data. So, of course, over the last few weeks, you've been getting flooded in the mail with things that say important tax documents, right? So your W-2s, your 1099s, your investment statements. Just make sure you have all those and everything that you need. Go through your charitable donations, medical expenses, make sure you have your mortgage interest, real estate taxes.
I hope you're writing fast out there, folks.
All those are important to get your tax return done. And I think one of the easiest things to do is take out last year's tax return and kind of use that as a checklist and go through it and make sure that you have everything accounted for from the prior year.
Yeah, you know, this is sometimes, you know, people get in this do-it-yourself kind of thing or try to take cheap shortcuts on this kind of thing. And it can be a giant mistake, can't it?
Well, especially with the tax laws, the way they change.
All the time.
You know, some things get sunsetted, so you can't use them anymore. Other things get added last minute. So it's hard for me to keep track of everything, let alone the average person.
Okay, so you get everything together, you got a pile of paper this big all over the place, and is it set in stone what you're going to have to pay, or can somebody come in and say, hey, I've got some magic tricks here?
Well, there are some magic tricks, all within the tax laws, though, okay? But, yeah, so for people, you know, the filing day is April 18th this year, so we've got a couple extra days for the weekend. However, you can still make contributions to your traditional IRAs. There's some simplified employee pension plans that you can make contributions to, even your health savings account, which people think usually end at the end of last year. So there's a lot of different things that you can look at to still make your contributions, and even a Roth IRA, even though you're not going to get a deduction for it, it's great to try to fund those to the max every year because that'll grow tax deferred and come out tax-free in retirement. So there's still some strategies between now and April 18th.
So there's a lot of people out there right now, and they hear all these different things we're talking about. They've heard the words before, Roth IRA and all these different things, max them out and all that kind of thing. But a person, it's pretty difficult for a person to do that without having a professional really guide them. Is that true?
Yeah, especially, you know, this is why we do the coordination, right? So we coordinate all the financial, tax, legal, and insurance, because it's one thing to just put the numbers on the return, you know, like a robot. It's a whole nother concept to actually try to come up with strategies for clients. I'm all for paying my fair share, and so is Mark, but we work together in order to make sure
it hurts sometimes.
Minimum you can.
It does.
Yes.
And we also like to be proactive. While we're doing this year's return, we're going to have an eye towards 2022 as well.
I wanted to ask you about that because, you know, you get here and all of a sudden you go, oh, I wish I had done this, or I should have done this, or, you know, there's still time to do a lot of things we're talking about, but it's probably the best time to start planning for the next time.
That's right. That's right. Especially, you know, right now you want to avoid common mistakes on the tax return. So you want to make sure you have all your income claimed. You want to make sure you're taking advantage of all the credits and everything. But also, if you do have a large tax bill at the end of this year, unfortunately, you don't want to compound that for 2022 by accessing money to pay for it in a way that's not efficient.
Who would ever think of that? You.
Right.
I would never think of that. You know, it's like that's why it's so important. And you know what I think is important too? Like, I have boys, they're like 27 and 29 years old. So they're starting to work and they're in the workplace and they're starting to make money. And they think, you know, they just click the boxes, do the easy thing and send it in. And that's really going to disrupt what they could possibly have in their future, isn't it?
Yes.
Yeah, it really does. And I've actually had my daughter graduated from college just a year ago.
Congratulations.
And I actually, one down, two to go. But actually I had a Zoom meeting with all of them because they don't understand their benefits. They don't understand that it's a great age to capture them and start putting money away now before they get used to spending all that money. And they can do a lot of that pre-tax through their 401ks and make sure you get the matching and stuff. So getting kids like that started really early out of the gate is one of the best things you can do for them.
So we have a lot of people in our audience out there. They're probably 50 plus or something like that. And I bet you 1 million of them have said, boy, I wish I had known. Or if I had started then, I'd have $1 million now. And it wouldn't have been that difficult. And, you know, I think, you know, maybe it might be too late for them. But if they have kids, like we're talking about our kids, you know, almost 30 years old, if you encourage them to do the right thing, you're on the right track.
That's right.
Yeah, it really helps out because you're ingraining a discipline that if they can learn to pay themselves that first 10 to 15, 20% a year, they're going to have, you know, a lot of opportunities for them in the future.
Okay, thanks a lot. Some good advice here, huh?
Yeah, I think so.
Yeah, an old guy like me, I learned something. That's pretty good.
Always here to help.
Okay, thanks, Jim and Mark. And it sounds like this is a good idea for you. It pays to be proactive rather than reactive. If you have questions about your 2021 taxes or you want to get a head start on planning for 2022, what a good idea. Just call Jim, Mark, and the whole team. And don't miss the Financial Quarterback leading into Fox News Sunday. So get involved right away. Thank you very much, guys.
Thank you.
Thanks.